classifications of financial service institutions in Sri Lanka. There are so many bases to categorize, to classify such institutions. Today's session, we are going to talk about classification of financial service institutions on the basis of service offerings to a particular group. Basis of service offerings to a particular group. It means customer. Based on the customer, the financial service institutions are categorized. The based classification of financial services on the basis of service offering to a particular group based on the consumer group. So it can be divided into two, retail financial services and wholesale financial services. Retail financial services and wholesale financial services. Retail financial services, it means these services are provided to individual and small medium business enterprises, entities, right? Many of you, people like me and you, and small businesses like shops, trading centers, are dealing with banks. Actually, that kind of banks is called, that kind of financial services is called retail financial services. Say in your village, in your town, you can find some commercial banks and other financial institutes like leasing companies and the pawning centers, right? So these institutions, customers are the individuals, the people, individuals and the small or medium business entities, enterprises. But there are another set of firms, financial services. They are not targeting about individuals. Their target customers are not individuals or small, medium business enterprises. Their target is government, and their target is larger companies, right? The larger business entities. Right? They are not providing services for individuals and small or medium enterprises. So based on that, there are two type of customers. The first type of customer is individuals or small medium business entities. Second type of customers are corporations, large business enterprises, and governments. So these are the two type of customers. So those institutions, financial institutions, are targeting on individuals or small medium business entities, are called retail financial service institutions. And those financial service institutions, those customers whose customers are large companies, business entities, and governments, coming under wholesale financial services. And the retail financial services, we will first talk about retail financial services. Retail financial services can be further categorized into three subcategories. Number one, acceptance of deposits, as well as providing ancillary services like lockers, remittances, etc. Many of us, like you and me, are dealing with banks, commercial banks, mean the People's Bank, BOC, NDB, Nation Trust, right, HNB. So we as individuals are dealing with them. So they are providing kind of services. Most important service is deposit. They are accepting a deposit from individuals and small medium business enterprises, business entities. And also they are providing other additional services, like they are providing us safety locker systems, safety lockers to safeguard, to uh, safely keep our valuable things, right? Remittances. If one of your beloved brothers uh, are working abroad, or uh, your beloved ones are studying abroad, so you have to send money to them, right? They are working abroad or studying abroad, you have to send money to them, or you have to bring money from them. So that kind of remittance services provided by the bank, it's coming under retail financial services, because target customers are individuals. The second type of service is lending to borrowers, right? Say you need some amount of money for your personal use or small business startups. So that time you can get a loan from the bank. It's target customer is individuals or small business enterprises. So lending money. So simply we can call as a loan services. And the third one is investment of funds in stock market, mutual funds, and insurance. Right. In addition to accepting deposits and giving loan to the customers, so they are doing investment banking. Like if you have money, so the bank will advise you how can utilize your money, how can you make money by investing your money, by investing your wealth on stock market and the mutual funds and insurance. We will discuss in detail what is mutual funds and insurance, right, in the forthcoming slides. First, we will discuss these things, and these three categories, right? These categories will be discussed in detail. First, acceptance of deposits. A bank accepts money from its customers. Money accept. So bank accept money from its customers and keeps the funds in interest-bearing account like saving account, fixed deposits, recurring deposits, flexi deposits accounts, or non-interest-bearing accounts like current account as per the request of the customer. Right? Uh, Normally, the people deposit their money into the bank for the purpose of keeping the money in a safe manner and earning interest income. So there are different types of deposits accounts in the bank. The first category of that deposits pay interest, and second category of the bank accounts which are not paying interest on deposits. When we look at the saving account, normally we all of us having some kind of saving account, therefore no need much explanations. And fixed deposits, so the banks providing 3 month, 6 month, 1 year, 5 year, 10 year deposits, fixed deposits. And once you deposit the money on such fixed deposit, uh, you will get higher interest than the saving accounts. And the thing is, you unable to withdraw the money whenever you need. But even it's possible, but you have to follow some rigid rules. Sometimes you have to sacrifice your interest income on fixed deposit if you are withdraw the money on before maturity. Recurring deposits, right? Like every month you pay deposits a certain amount of money. Like when you get a salary, you can transfer that salary into that account. And flexi deposit account, it's mean it has two types, two things. That is flexible. The time is fixed, but anyhow, it's kind of fixed deposit, but anyhow, you can withdraw the money whenever you need, but you have to you have to sacrifice some amount of interest income for that. And non-interest bearing account is like a current account. A current account, so they can write checks to withdraw money from them. Rather than getting the passbook, keeping passbook, they are uh, having checkbooks. Deposits are payable on demand in case of saving account and current account, or on specific maturity dates in case of fixed deposits, right? Flexi deposits, flexible deposits enable you to withdraw your money on demand, right? Flexi deposit enable you to withdraw your money on demand, as well as earn a fixed deposit interest on the funds which are not withdrawn. Let's say, for example, I tell you one example to understand the differences between the fixed account and the flexible deposit, fixed flexible accounts. Right? If you put your money, say you have 10 million rupees, if you put that 10 million rupees in the fixed deposit, it takes it's 1 year maturity. We deposit 10 million on 1 year maturity fixed deposit. You For that you will earn interest 15%. Then how much you will get interest? How much you will get interest for 10 million for 1 year at 15% interest? How much? You will get 1.5 million as interest for the year. End of 1 year, end of its maturity, you will get 1.5 million as interest income. If you but the thing is, you are unable to withdraw the money before maturity. If you need money immediately, you can withdraw the money, but you have to uh, follow some rigid rules, and also you have to sacrifice your interest income on that deposit, right? Even 11 months past, 1 year remains to mature. This time also you can't. It's very difficult to withdraw that money, right? If you withdraw the money, you have to sacrifice the interest income. And flexi, say the same 1 million, same 10 million is deposited in the flexi account at the rate of uh, 15%. But the condition is, whenever you need money, you can withdraw from that account, right? After 6 months passes, you if you withdraw 5 million, and you will get interest at 15% from the unwithdrawn money, right? They will pay interest on the amount of money which are not withdrawn, right? Say if they are 50 for the 10 million, 15% plus 15%, then can get 75,000 at least, right? As interest income from the flexi. If they withdraw their money from the bank from flexi after 6 months. And also child plan like Sisi Udana account and salary account and retirement service, stock trading accounts through bank brokers are also offered in retail investors, right? To have a practical example on these kind of services, if you visit websites, banks website, they have categorized, retail banking, corporate banking, and investment banking, right? Investment, right? Then you can find the services uh, from them, right? Available services from that banks. Lending. So lending means it's called loan, right? The banks provide a loan, bank loan. The major use of bank funds, the banks are accepting deposits from their customers, right? From the deposited money, they make money by providing loan to its customers, and for the borrowers on the borrowing they are generating and making money. The major use of bank funds are loan and advances. Credit facilities extended by the banks to the borrowers are fund based and non fund based. Sometimes the lending is based on the fund. Sometimes the bank will uh, release fund to the borrower. Sometime is possible for non-fund based. For example, uh, they are giving some sort of securities, right, for their loan, right? Rather than releasing money, they are giving promises. Right? It's kind of non-fund based lending. Retail lending, that is lending to individuals and small business entities, is done in the form of personal loans, vehicle loans, personal loans. Sometimes you may, uh, right, if you plan to have a marriage function, wedding, that time you need money, right? So that time you can go for the bank and you can get a certain amount of money. It's a loan. And vehicle loans, you are very much keen to buy a vehicle, but you don't have enough money in your hand. This time you can go for the bank to get vehicle loan. Educational loan, you want to you want if you want to continue higher studies, that you don't have enough money, then you can go for a bank and they will provide you money, then you have to settle them. And housing loan, many people are enjoying this kind of facilities provided by the bank, right? It's long term, 10 years, 15 years term loans, right? Housing loans, gold loans, and pawning, like that, loan against property, right? If you if you want to buy some properties, right, then you can get the loan from the bank. And credit card loans, credit card. So if you purchase something by using your credit card, it's mean implicitly, by the background, the bank has paid the money to the merchant when you use credit card. Business loan in the form of working capital finance, which includes a proper mix of cash credit, overdraft, demand loan, bill purchase, and discounting term loans. Most of the business people are uh, financing, getting loan from the bank, especially for funding for working capital. So that's why they are writing checks, right? So if they bought 30 days check, then the bank will take the responsibility of giving the money in 30 days, right? In 30 days, within the 30 days, the uh, merchant have to deposit that money in that bank account in case of bank overdraft, right? Bank overdraft, what's OD we call it. Sometimes a bank gives short-term loan by cash for the business, small businesses, and sometimes it discounts some bills, and sometimes banks will give their receivables also. Mm, and investment advice, with the growth in consumerism, availability of more money in pockets of working class and growth of capital markets, banks have introduced various advisory services on their own or with the help of specialists, which includes financial advisors, stockbrokers, fund managers, investment banks, mutual funds, and insurance companies, right? Investment advice mean beyond the basic services, beyond the traditional services of the banks, like accepting deposits and providing loans, right? In addition to these traditional services, banks provide some investment advices, right? Wealth management services, right? If you have money, right? If you have money, then bank will advise you how you can make money. So sometimes if you go to the bank, there are some officers, they will advise. So advise how to invest in a stock market, or how to invest in mutual funds, right? How to invest in other business businesses alike. This kind of services here. Now, so they have introduced various advisory services. They are providing advices on their own or with the help of specialists, right? Sometimes bank officers will give you investment advice, and sometime if you as a customer, you need an special service, special advice, advisors, fund management advisors, then they will employ, the bank will employ specialist to give you advice, financial advice, right? Which include financial advisors, stock brokers. If you want to invest your money in the stock market, they will assign stock brokers for you for the purpose of giving advice. Fund managers, right? Investment banks, right? Mutual funds, we will discuss what is mutual fund and insurance companies, right? And consumers are willing to pay fees to the bank for providing advisory services to manage their wealth. Normally, the banks getting income by the way of getting interest. Say when they are providing loan, they are earning interest income. But in advisory services, the bank charges not interest income. They are charging fees on the advice, right? Consultant fees or advisory fees. Banks are massively cross-selling the mutual funds. They are buying and selling mutual funds and insurance products to their retail customers, as they earn huge fees as income to the bank without any outlay of funds, right? Sometime you may getting phone call from the bank. They are encouraging you to get an insurance policy, right? Sometimes they encourage you to invest in stock market, in mutual fund, especially unit trust, right? So from this kind of services, they are getting a huge income. They are making more money without outlay of fund. Outlay of fund means without giving loan. Without giving loan, they are earning a big amount of money from these advisory services by the bank. This approach involves delivering integrated financial services that are not limited to traditional retail banking services such as lending and deposits. You know, some periods, Dialog PLC, Dialog Axiata, they are offering insurance daily basis. Every day we have to deposit. They will charge 5 rupees in our account balance. You know, some I also received so many calls from the Dialog and other mobile phone service providers. Like banks also can do this business, might do this business, right? So they are doing some kind of promotions on behalf of the insurance companies. So when you see the dialogue genie.lk. So they are providing uh, mutual fund services on behalf of Soft Logic Finance. We will discuss right here. Mutual fund. Mutual fund. You see this. Mutual funds are the marketed. Mutual funds are marketed as a product, exposing investors to lower risk and giving option to invest in small chunks, like in the systematic investment plans or in a larger chunks as well, right? Now you don't have enough money. Most of the people, most of the individual does not have enough money, but they are willing to invest their money in the stock market, right? So they want to invest in the stock market, but they don't have enough money, but they are willing to invest in the stock market from a small amount of money. The best option is mutual fund. Best option is mutual fund. Mutual fund means, right, say for example, Soft Logic Finance or NDB Wealth. They are, these are the examples for mutual funds. So what they are doing is they are collect money deposits, right? Each deposit 5,000, like that. Each units equal 5,000, right? They are selling units to its customers. So if I want to deposit in mutual fund, I want to deposit just 15,000, then I can buy 3 units from them, mutual funds. Likewise, there are so many individuals, a large group of individuals, large group of small investors. They will put their money into the mutual fund. And the mutual fund, say Soflogic Finance or NDB Wealth, they're collecting all the big amount of money and they are deposit, they are invest in stock markets, government securities, treasury bills, treasury bond, promissory notes, right, bond, like that. And they earn a profit on that investment. They will earn return on the investment, and the return will be distributed among the people who have contributed on the mutual fund. So I can show you a website of dialogue genie.lk. So see, uh, genie, right? And mutual funds, right? Here, mutual fund, right? Have you been looking for a smart way to grow the wealth and invest in your future? Right? Mutual fund investment solution is ideal for those looking to begin their investment and wealth management policy. Here, uh, soft logic investment, right? Right? You can start by investing a lowest 5,000 rupees, right? So you don't want to enough money, right? You can start investment on stock market or any other investment tools. Then you can start from a small amount of money. See the features, right? Ideal for short-term deposit, investment options, enter and exit at any time, and get access to a diversified portfolio of investments, no penalty for exits. So they have make promotions, right? So you can visit the website and you can understand. And why invest in money market fund? So they have promotions. Here you can find a lot of information, a lot of things from frequently asked questions. Right? So there are what is mutual fund, right? And how do I open mutual fund? What are the documents? Right? So it's very simple thing. And NDB Wealth. So BDH fund, NDB Wealth, they are also providing you mutual, right? Their earnings, right? So you can start from 5,000 unrestricted withdrawals. Right? And likewise, we can uh, invest if you have additional money, but you don't, if you don't have enough big capital and you willing to invest in stock markets, you can choose this option. So there are other mutual funds in Sri Lanka, right? And mutual funds are marketed as products exposing the investors to lower risk and giving option to invest in small chunks like in systematic investment plans or in a large chunks as well. You can invest a small amount of money as well as a big amount of money. What they are doing is mutual fund organizations, they collect all of their money, and they invest in stock market and other investment, profitable investment ventures. Mutual funds give both the large and small investors the benefit of trained, experienced, and specialized management together with continuous supervision. And, you can find in the mutual fund the fund managers, portfolio managers. They are well expertised in managing funds. They are stock market expertise, right? And and there are so many expertises. And here, uh, the mutual fund products can be categorized into equity fund, bond fund, hybrid fund, money market fund, etc. The banks are offering mutual fund products. You know, NDB is a bank. It provides wealth management service like they are providing mutual funds. They put name as mutual NDB Wealth. Banks are offering mutual fund products to their clients, either together with own subsidiaries or sell mutual fund product of other mutual fund companies. Sometimes the banks uh, may create their own subsidiary like NDB. NDB has a one branch to manage this fund for mutual fund. Sometimes uh, the banks does not have their own mutual funds. They will they will give that fund to other mutual fund organizations on behalf of their customers, bank customers. Bank provide advisory services, fund management services, as well as portfolio management services to their clients, inclined towards buying mutual funds. You know, the banks will give you a lot of advices. Most of the times, they advise you to invest your money in the mutual funds. You see, this diagram will help you uh, to understand how mutual fund works. You know, there are so many investors, a small amount, 5,000. So say I will buy 10 units. So each unit 5,000, 5 into 10 for 50,000, right? Like other people invest 100 units, 50 units, 10 units, 5 units, even 1 unit, right? They are investors, and all their money will come as a pool their money together. They are put all the money together, then it will become a big amount. That amount will be transferred to the fund managers, right? Fund managers who have a lot of experiences, expertises. They have skills on fund management, stock broking, stock investment, and other investment ventures. And what they do, choose securities to invest, and the fund managers will uh, decide whether they are going to invest their money on the stock market or the government treasury bond, treasury bills, or the corporate corporate bonds. So whatever. So based on the situations, based on the economic conditions, they will decide where they are going to invest. And these securities, it may be the stock market shares or whatsoever, they generate returns. They generate return, and this return will be distributed among investors, passed down to investors, right? The return will be uh, distributed to the investors based on their portion, based on their contribution, right? And another thing, the bank sometimes also providing insurance. Sometimes banks will uh, encourage you to make insurance policy, life insurance policy, medical insurance policy, right? Sometimes we may confuse. So is it bank or is it insurance company, right? So it has another name. The bank, it's a collaboration of bank and insurance company. It's called bank insurance, right? Bank assurance. Here, insurance services and its products. The selling of life insurance and other insurance products and service by bank institution is called bank assurance. Bank assurance, right? It's called bank assurance. Bank assurance mean here is a blue circle. It's what? It's a bank. It's a traditional banking service. Insurance companies which are not involving in insurance. So which are involving in insurance, but they are not involving in banking activities. And the pure banks are not involving insurance activities. But both banks and insurance companies are come together and provide uh, the bank provide insurance services on behalf of insurance companies. The bank staffs and tellers, cashiers, bank staff and cashiers, rather than insurance salespersons, become the point of sale and the point of contact for the customers. On behalf of the insurance company, on behalf of insurance company, the bankers, the bank staffs will promote insurance policies of a particular insurance company, on which this time the insurance company no need to assign additional staff to promote their policies to their customers. So bank have its big customer base, and the banks use that opportunity to make money. What they are doing is they are promoting insurances, insurance policies among their customers. You know, the banks are advised and supported by the insurance company. Bank staffs are advised and supported by the insurance company. That they will provide training. They will give them product informations, marketing campaigns, and sales training, right? They will train. The insurance company train the bank staffs to promote the insurance products, insurance policies, and the insurance policies are proceeds and administered by the insurance company. And the insurance policies are processed and administered by the insurance company, not by the bank. The bank is promoting them and collecting money from them. These partnership agreements arrangements can be profitable for both insurance company as well as the bank. Banks can earn additional revenue by selling insurance product, insurance policies. There are uh, a vast type of insurance policies out there in the market. Right? Banks can earn additional revenue by selling insurance products, while insurance companies are able to expand their customer base without having to expand their sales forces or pay commission to insurance agents or brokers. Right? So once the insurance company made an agreement with banks, they don't want to open many branches in the island wide. So the bank, the bank branches, the banks will be worked as an agent on behalf of the insurance companies. So therefore, the insurance company can reduce the huge cost, and also they can save uh, commissions. Insurance products are distributed by the branch staff, which is sometimes supported by specialist insurance advisors for more sophisticated products or for certain type of clients, right? Some situations, uh, the banks will give propose promote specific insurance policies. That time they can call for insurance expert from the insurance company. The bankers, when they promote, the bankers when promoting the insurance product, they don't have much information. Tailor-made insurance policies, customized insurance policies. That time they can call upon representative of insurance company. Life insurance products are fully integrated in the bank's range of savings and investment products, and the trend is for the branch staff to sell growing number of insurance products that are becoming further removed from its core business. Say, for example, you may observe when you invest, when you put your money on a particular account of the bank, they will advertise you, uh, you can get free insurance. And if you get if you uh, get an accident, you can get this much amount of money as a client. If you have an illness and if you are admitted to the hospital and you met an if you met an surgery, then you will get this amount of money. No, you may observe the bank provides some insurance policies for their customers, saving account holder or fixed deposit account holders, right? So in this way, uh, the banks promote insurances. So due to this, the bank also promote themselves. Rather than giving interest only, they are giving a insurance policy also to their customers. Therefore, the customers will be attracted into the towards their banks, and also they can expand their business. Now we move to the second category, wholesale financial services. So far we have discussed about the services provided to the retail customers, individuals, small, medium business entities. Now we are now we are talking about corporate banking. So corporate banking includes large companies and governments, right? Large business enterprise also. The wholesale financial services are provided to large corporations, including governments. The funds outlay is huge in comparison to individual customers. No, so normally we are depositing 5,000, 10,000, 50,000, 100,000 like that in the bank account as individuals. But the corporate bank customers, the companies deposit millions of money into the bank account, right? When here it's a large amount. When we compare the fund inflow and outflow, fund flow, it's significantly large at a single time. At a single transaction, it has a big amount of money. The funds outlay is huge in comparison to the individual customers. Large amounts are invested in deposits and the borrowings are in millions. The range of services overlaps to some extent with those provided to retail customers, right? So they're providing huge services. It overlaps the individual banking retail service, retail customer services. So services which are generally restricted to the wholesale market. Wholesale market being corporate, only for these services limited only to corporations or the governments. Right, the wholesale market includes, you see, the merchant bankers or lead managers. The bank act as a merchant banker or the lead manager. They are lead manager. So banks are engaged in the business of issue management, either by making arrangements regarding buying and selling or subscribing to securities, or acting as managing manager or consultant or advisor, or rendering corporate advisory services in relation to issue management. You know what do you mean by issue? What do you mean by issue? Right. Say a company, I'm a private company, I'm going to issue shares in the stock market. I'm going to issue shares in the stock market, or I'm going to issue some shares uh, by private placements. I'm not willing to go to the stock market. Rather, I'm going to issue shares from public, but not through the stock market. So that time the take bank will advise them. So we will take some amount of shares, then we will sell the shares among our customers. They will find the investors on behalf of the companies. So lead, they are finding the leads, right? So the banks are engaged in the business of issue management, share issue or debt issue or debenture issue whatsoever, either by making arrangement regarding buying or selling or subscribe sometime. So normally it's buy the stocks or buy the debts, buy the bonds and sell to the customer. Sometimes the bank itself buy shares from the bank. Securities or acting as a manager when they are issuing that sort of stocks and debts, they are acting, the banks are acting as a manager or consultant or advisor or rendering corporate advisory services in relation to issue management. The bank to an issue. The banks are engaged in activities such as acceptance of application forms along with application money from the investors in respect of issue of capital and refund of the application form, right? When the companies issue shares to the public, so they are inviting applications from the investors. Some people, what they do is, without the pure idea of investing money, they are just giving, they are filling the form and send to them, and finally they are not respond. To avoid that kind of misbehaviors of such kind of unethical investors, bank will do that part. The bank will issue application forms and accept the application form from the investors along with application fees. Once they actually invested on that issues, the bank will refund the application money, right? Underwriting, new securities, underwriting. So when the companies are issuing stocks or debts, the banks will take all the uh, shares and they will resell among their investors. So in underwriting, financial intermediaries arrange to sell securities for a company, right? They undertake, they are uh, functioning as an intermediaries among between the company and the buyers. In underwriting, financial intermediaries arrange to sell securities for a company to the public or to other institutions for a fees. Underwriters agree to take up securities which are not fully subscribed. Sometimes if they are not, if the banks are failed to sell all the securities issues, the banks will take responsibility to buy them. Underwriters assure the company that the full amount of money sought will be obtained. Underwriting is an issue also creates confidence in the securities being issued. Underwriters are appointed by the issuing companies in consultation with lead managers or merchant banks. And the debenture trustee, you know, when companies issue debenture in the market, uh, they have to provide some securities. And for providing securities, bank will take responsibility for that. Right? A debenture trustee is a trustee for a trust deed needed for the securing any issue of debentures by a company. Right? Uh, so once the company issues debentures to the public hesitate to invest on buying the debentures. Sometimes once the company issues the debentures and they will go home, disappear. To avoid that kind of situations, the investors need a security, a guarantee. So for that, the banks come forward and they are functioning as a trust, right? So the investors will trust on the bank. Based on the trust, they will invest on the debentures. So the banks fulfilling the capital adequacy requirement as per the current Basel III norms are eligible to act as a debenture trustee. So banks are also governed by Securities Exchange Commission regulations for acting as a debenture trustee. And portfolio managers. The companies are having a different type of business and they have different types of investment pools. And companies does not much expertise in managing that fund investments. That time the bank will provide that service. So bank advise or direct or undertake. The bank will advise them. The bank direct them on behalf of the clients, especially companies. Clients, the management, administration of the portfolio of securities or fund of the clients. Corporate restructuring. Corporate, so there sometimes the companies are willing to introduce some product into the market. Sometimes they are going to expand their market, or sometimes they are going to merge, uh, amalgamate with another company. So that kind of situations, the banks will provide a significant contribution. So banks provide advisory services for the profitable business growth internally, right? Uh, Internally through the process of introducing or developing new product. Sometimes introduce new product to the market or developing existing product into the market. For cash management, fund management, expanding or enlarging capacity of existing product. So they want to upgrade their uh, production facility, upgrade their factory, right? Or externally through process of acquisition of existing business firms. The acquisition may be in the form of merge, acquisition, amalgamations, takeover, absorption, consolidation, etc. Now we'll see the factoring. Now uh, factoring in simple terms, the companies, when they are doing business, there are some what you call uh, receivables. To encash the receivable, it takes time, 30 days or 60 days or 45 days or 1 month and so on. So until maturity of that receivables, they are unable to get money. So what they're doing is they submit their receivables, debtors to the bank, and on behalf of the receivable debtors, customers, the bank will give that money to the company, and later the bank will collect the money from the particular debtors. The factoring is a fund-based financial service which provide resources to finance receivables as well as facilitate the collection of receivables. The bank can act as a factor to maintain and administer the sales ledger as well as provide collection facility of accounts receivable. And the second type of service is forfeiting, right? When a company is dealing with export and import business, this kind of forfeiting occurs. Forfeiting is a form of financing of receivables pertaining to international trade, especially in international trade, export, import business. Forfeiting involves purchase of trade bills, promissory notes by a bank without recourse to the seller. So it will explain in the simple diagram. You see, this is a fact. Uh, First, we will discuss the factoring process, as we discussed earlier. Factoring, not forfeit. Factoring process, here there are parties, seller and buyer. Seller mean our company, a particular company. The particular company is make some sales by selling inventories. First, sells the good and raises invoices, right? The bank, the company once makes sales, they will raise invoice. Once they made sales, what they're doing is the second step, sellers go to the banks. Sellers go to the banks. The bank will act as a factor. The seller send the invoices for funding, right? Now, the receivables will be submitted to the bank, and the bank will pay 70 to 80% of the invoice, say 100 million receivable, right? 100 million receivable, uh, it will be submitted to the bank, and the bank will give them up to 75 to 80% of the 100 million, say 75 million. Out of 100 million, it will pay 75 million to the seller. Then the bank will collect money from the buyer. The bank will collect money from the buyer, and then the bank pay the balance. Earlier it was 75 million. Once the bank collect all the money, the bank will give the remaining balance to the seller, and then the seller, our company, should give commission or fees, right, to the bank. They make payment of factoring or commission fees depending upon the type of factoring service, right? And this is forfeiting. Forfeiting, right? It's an importer and exporter. So assume that we are as an exporter. So, and we have made some agreement, no? Initially, signing of the commercial contract including payment schedule. So Sri Lanka, from Sri Lanka we are exporting to the US importer. right? So importer in US has its own bank, Importers Bank, and also we have a bank in Sri Lanka, discounting bank. It's our bank. This is Importers Bank. First, we export and we sign the agreement. After signing the agreement, the Importers Bank will inform to the Importers Bank. So what they're requesting is a request may be endorsed it or guaranteed on the amount due. So the importer will inform to the Importers Bank about this agreement. Then what will happen? Our company, exporter, a signing of the forfeiting contract, saying that we have sold, we have export certain amount of value of goods to the particular importer, and then they will delivery of goods, delivery of goods the importer, and then after exporting delivering the item, submission of discount document. So once the delivery of the item, they have to wait for a period of time now to get the money. So before that, what we are doing is they go to the bank, submission of the discount document, and the bank will pay the money. We don't need to wait until the due date from the importer, right? So the bank will give us the money, and then our bank will communicate the importer's bank requesting a repayment of the amount due at maturity if importer's bank has endorsed the deposits, right? So due to this forfeiting features, um, the bank get additional income, and also a company also getting their transaction easier, right? So it is factoring, forfeiting, mutual funds are important things you have to remember. It may be probably it's come to the exam also, right? uh, Leasing, you know what is leasing? Leasing is a process in which the company can obtain the use of certain fixed assets for which it must make a periodical payment for lease rental. At the end of the payment period, the asset revert back to the lessor. Here they are mentioning operating lease, not financing lease. So a bank can arrange finance for the payment of the lease rentals after the appraising its clients. And venture capital financing. So venture capital financing is mean say there are small business people, so they have a good idea to start up a business. Anyhow, they don't have enough money to start up that business. That time they can go for get to the then that time they can go to the bank, and they are requesting to act as a venture capitalist, not in the form of loan, as the form of the owners, right? Venture capitalists, they are financing not for interest, but they are demanding higher portion of profit on that. So venture capital financing is a new technique of financing to inject long-term capital into small and medium business sector. Banks are very active in arranging venture capital for its client, which can be in the form of equity related investment in a growth-oriented small or medium business to enable an investor to accomplish corporate objectives. In turn, for minority shareholding in business or the irrecoverable right to acquire it. Rather than providing loan, they are buying equities. They are becoming owner. And export financing, when a company engaged in export, they want some sort of finance to the exporting company. So here the export banks handle a variety of financing program for export oriented units, I mean exporters and importers and overseas investment by companies. The entire range of export credit service such as suppliers credit, pre-shipment, post-shipment finance, export transactions in agriculture sector are provided by the banks at comparative interest rate. You know, if you have get a bulk order from US or any other country, you need a big amount of money to prepare the item, for shipment. So that time you can go for the bank and they will finance. That's called export finance. Credit proposals from small medium enterprises under various lending program of the banks are also encouraged. Banks also offer a variety of advisory and value added information services aimed at investment promotion, assistance to companies to enable them establish their product in overseas market. And we will stop from here. We will start in the next week from this slide onwards. So far we have discussed about the classification of financial service institutions. And next week onwards we will discuss with characteristics of financial services. And I will give you attendance link.